The markets rallied for the last 3 days after Pfizer announced that it has found a vaccine. Everybody is exuberant and everybody is in a joyous mood. There is festive season coming around India on Diwali day. I think you will see this next day after Diwali, and therefore it will be a dampener. What is going to dampen India's mood? Welcome back to Be Rich. Along stock prices, some one commodity has rallied enormously. It is not gold. Gold has corrected. What has happened is Brent oil futures have shot up 15% in 3 days. From last weekend till Wednesday, oil prices have gone up 15%. Oil today is futures market is trading at $45 a barrel. This is delivery January, and it has a big influence on the spot prices. There is another important thing development. There is what is known as price differentials. Basically, the difference between a January contract and subsequent monthly contracts. There is even bad news there, further news there. The price difference between January Brent futures and June Brent futures has widened. Before this surge, the difference was that there was a discount of $1.35. That is, if you took delivery in June, then oil was $1.35 cheaper than delivery in January. Now that has reversed. What has happened is the delivery in June is 35 cents costlier than what is happening in January. What does this tell us? This tells us that the market expects oil demand to go up, and definitely it will go up as the world has unlocked. Today there is a short term problem blip, in the sense there's a second wave in Europe. Come January, February, when vaccines are being used, economic activity is going to be in full blast. Aviation will take off, and demand for aviation turbine fuel, near zero today, will shoot up. All this indicates that oil with cheap money is going to go to $50 to $60 a barrel. Why is this bad news for India? Well, in spite of tall claims made for the last 6 years, India's oil wells are drying and aging, that they are going to produce lesser and lesser oil because the government of India is stripping these oil companies of dividend to meet their revenue deficit and leave them with little money to invest for the future. This means India will import more than 80% of its oil. As India imports more and more oil, it is going to mean that oil is going to, at $50 a barrel, is going to mean two things. One, the prices of oil have to shoot up. Petrol should be at 105 rupees a litre if government wants to maintain taxes so high. Second, even if government cuts taxes, petrol is going to be 80 to 85. The government can neither afford to cut taxes because in the first 6 months, the only positive revenue indicator has been that excise duty collected from fuel, which is up 30%. If the government raises the price of oil, goes for a combination of rising oil prices, rising petrol and diesel prices, and turn cutting taxes, then the unthinkable will happen. Fiscal deficit, which we expect 8 to 9%, will mean that fiscal deficit will be 100, will cross 100. Very clearly, if the vaccine comes and COVID is successfully fought, oil will be at $55 to $60. At $55 to $60, India has to either increase prices, stroking inflation, or cut taxes and have running a bigger deficit, which will also stroke inflation. When lower prices meant higher taxes, a win-win situation for the government. Higher prices means you cannot keep on jacking up the fuel price. And what can be cut? Prices will remain where they are, and you will cut the tax revenues. If you cut the tax revenues, the revenue deficit and fiscal deficit of both states and centers will go through the roof, forcing the government to get into crisis mode as inflation shoots up. So, what is the government going to do to make up the revenue deficit. Let's wait and watch and see. I don't see there's a short term solution because if crude prices cross 60, then there will be doubling of efforts to the EV vehicles. Already Tata Nexon is popular in India. We will see more electric vehicles. Already Aether's bikes and Bajaj scooters of electric are moving fast. If government jacks up the price of fuel, the transition in scooter and cars will be quicker, which means a permanent loss of revenue. India needs to solve a big fiscal problem that is coming next year, which threat is greater than the COVID pandemic threat. Let's wait and watch what the government is able to do. This is extremely good news for Reliance and Reliance shareholders because if crude prices go up, margin will also go up. Reliance refinery business will increase, so they will get extra margins to pay down debt further. So Reliance has not been doing well for last 2 quarters. Reliance petroleum division will do extraordinarily well in the next 12 months. The Gulf economy, Indians in living in Gulf can be extremely happy because this means lesser firing, more income for people in Gulf, and it may not mean more jobs for Indians. It means existing jobs will not go down, and people can look forward to another couple years of stability. Thank you for watching Be Rich. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. If you use Kindle, you can buy the book using the Kindle link given below. If you want a hard copy, send a message to the WhatsApp number given below and my team would get in touch with you. At the very end, if you want to get in touch with me, please send a mail to berichenglish@gmail.com. I am grateful for your support of Be Rich.